Donald Trump shocks the world once again, winning the U.S. presidential election last night in very decisive fashion. So it's Trump 2.0 as he enters his second term in markets today. Pure euphoria following the election last night. S&P breaking out to new all-time highs, I think across the board, nearly 3% on the major indices. So a very strong response from markets to the very decisive victory for Trump last night. But yeah, let's not talk about what just happened. Let's talk about what is in store for a second Trump term. That is what I want to discuss tonight. To do so, we're going to talk through this using the Macroeconomic System State Simulator. And yeah, just kind of lay the groundwork for what I think the next term Donald Trump is going to look like in terms of the big three: inflation, growth, and unemployment. Before we do that, make sure you get subscribed, turn that notification bell on, and if you find this video particularly helpful, which I know you will, because we're gonna talk some really cool stuff tonight, give it a thumbs up on the way out. It would be much appreciated. So if you're new here, just a quick review of what MESSI is. If you're not terribly familiar, it is the Macroeconomic System State Simulator that myself and Ty over at Relearning Economics have pieced together. We've pioneered technologies to bring together deep learning, to bring together AI, to bring together system dynamics, and come up with really the most sophisticated forecasting tool available for macroeconomics. It tracks hundreds and hundreds of variables, defines them all as stock flows, puts those into a system dynamic model defined by the various heterodox MMT theory to create a system of like over 30,000 feedback loops. It's incredible accuracy in terms of how impressive this thing is. And if you want kind of more details about what's under the hood, Ty and I did a live stream on Monday where we went over quite a lot of kind of what's happening and what this thing is, and some back tests and more detail. Check out the live stream. What I want to talk about, though, is what's in store, right? And I'm going to qualify this by just saying, look, what we don't know, and of course, Trump did have it's a landslide victory. And at this point, I think the Republicans have control of the Senate. And I'm not entirely sure where the House is at, but it's going to be near control of the House as well, or at least 50-50 or close to 50-50. He's going to be able to get in and probably push forward a lot of the policies. But it really is now just what policies does he actually want to enact. I know tariffs are right on probably the top of the agenda. That seems like a guarantee. I know he said maybe the green light to Elon to cut $2 trillion in spending, whatever that ends up being. I know he's going to want to put pressure for rates to push much lower, tax cuts. So a lot of, generally to be understood pro-business sort of, except for the tariffs, but kind of pro-business type policies. But regardless of what policies he gets in, the baseline case is still what's in front of you on your screen in terms of the underlying pressures that are going to emerge as the second term in office takes place over the next 4 years. So what you're seeing on screen right now is still pretty much the base case of where we would have been even before the election, and we will certainly tweak things as we get more information in terms of the various policy decisions that will be made. But the underlying pressures are still there, and I think the thing that's going to jump off the screen first is what's in the top left here, which is the inflation rate and the forecasted inflation rate. So just to get your bearings, what you're seeing, everything that's gray and the kind of transparent gray, that's the forecast. Everything before still being generated by the model and the various endogenous interactions of the theory and the model with the variables, but that is us, essentially using that data to track the prior outcome and then allowing the model to forecast into the future. So the forecast is in the grayed out area, and what you're seeing is, from an inflationary standpoint, still continued cooling inflation into 2025, but then as we get into 2026, what I've been expecting, and we're seeing this in our model, is eventually an echo boom of inflation. And I think this is going to be the big surprise into 2026 that Trump is going to have to face in his second term, is that inflation is primed to take off. Now, along with that, we are going to see an economy that's going to get very, very hot as we enter 2025. We are still very much in the early innings of this business cycle. If you look at things like credit or loans and leases, we haven't seen a massive expansion yet. Yeah, we've seen some acceleration, but far from a massive expansion. And again, I think we're in still maybe the third, fourth inning of this business cycle. We have a lot of growth, and we're going to see a lot of that come into fruition as we head into the second half of 2025. And because of that, we're going to see unemployment push much, much lower, and employment really start to pick up. And the biggie is going to be the wage, the pressure on wages to push higher. And I think that is going to be kind of the key thing that's going to drive inflation higher from this point as we enter 2026. And depending on various policies that he enacts and various policies that don't get enacted, that's going to impact maybe the amplitude of inflation that we end up seeing. But what I feel pretty confident in is, yeah, maybe the frequency might be off by a couple months. Maybe we see inflation really creep in, say mid to late 2025. Maybe it's early 2026. But inflation is going to be around the corner, and maybe it doesn't get back up to the 8% that we saw back in 2021. But we should expect a kind of a full echo of inflation because of where we're at in this business cycle. I think that's the most important thing. So what I'm going to do, just to kind of set the stage here, and there are many, many different elements that I think are really kind of pushing the growth that's about to happen and the subsequent inflation that will come on the back of that. But the big one that I want to point out, and I think will tell the story best as to why inflation is likely right around the corner, is because when we had really a reset of the business cycle in 2022, what we didn't get is the full collapse of the economy, in part because of the massive spending that took place post-COVID and everything that had kind of already started up in the post-COVID era. It allowed for a soft landing, to steal a phrase. It allowed for a soft landing, and so we never saw that huge spike in unemployment, and we never saw this kind of exaggerated reset that oftentimes follows recessions, because we just never really had a full recession in 2022. So effectively, we're picking up a new business cycle off the back of a business cycle that never had a full reset. That's just never really happened before. And so it sets us up essentially at to take off at a higher sea level, if you will, right? At a higher altitude than normal when you take off on the next business cycle. And so what you can see here on this screen is I have loans and leases to kind of show just the kind of like the core part of business lending for kind of productive output. And you can see that loans and leases in the 90 recession and the 92 recession, or I'm sorry, in the 2000 recession and the great financial crisis, loans and leases collapses as unemployment pushes higher, and then those kind of ebb and flow, and then you get the reset in both direction. Unemployment pushes lower as credit begins to expand. Obviously, you need employees to hire to run your business, and that creates more output and business activity. And obviously, when the business cycle ends, that all reverses. We just never had that, right? I mean, yeah, we've had a brief increase, a very subtle increase in unemployment, but far from a complete surge higher in unemployment that would be consistent with the recession. But what we did get is the collapse of the business cycle. We saw lending completely collapse in 2020 and has remained pretty cooled off in 2023, far from really taking off. But that is exactly, in 2024. But that is exactly what is going to start to happen in 2025. So again, we're just taking off this business cycle from a higher altitude than where we normally do, meaning that because we never got the full reset, we also never saw wages, even though wages came down quite a lot in relative terms, in terms of like rate of change, they didn't come down enough. And we're going to start the acceleration process of wages at just a higher level. So hiring is going to kick up as productive expansion takes place, as credit expansion takes place. That's going to put upward pressure on wages. And since we're already at a very kind of full employment scenario, it's going to just lead to much quicker inflation amongst many other variables that, again, just didn't have the full reset that you would expect after 2022, 2023, into 2024 from a recession that just never kind of came because of the whole setup in the post-COVID era and just the massive amount of cash that was still left in the system from the various stimmy checks and whatnot. So that is where we find ourselves, and that's, I think, going to be the big theme of the second Trump term, is the very thing that I think got him elected, which was the sour taste in the mouth of the electorate for the inflation that we saw in 2021, 2022. That seemed to be the predominant issue in the exit polls. I have to admit, it was a learning lesson for me in the sense that people really hate inflation, and they're going to get rid of any elected officials that they think caused that inflation. And Kamala was the victim of that. And the question is, how will Trump respond to the very thing that likely got him elected that he's going to have to face now from a macro perspective, which is going to be this inflation as we get into 2026. So if I had to make a call for the next 4 years in terms of how his term is going to play out, here's how I see it playing out. 2025, his first year, relatively stable growth, nothing spectacular, quite an ordinary year. Markets push ever so slightly higher. And then 2026 is where the fun starts. We start to see growth really take off throughout late 2025 into 2026. Inflation really starts to ramp up into 2026. And then by the end of 2026, I think we'll start to see the signals that we are end of cycle. And probably by late 2026, maybe 2027, we're going to start to see the signs that we might be finally headed for a real end of business cycle washout recession, depending on what fault lines the private credit expansion, the boom that we see finds. That'll determine how bad the recession ends up getting. But I would imagine 2027 we'd see some sort of financial crisis. I'm not saying great financial crisis, but some sort of financial crisis that leads to a recession into the end of the second Trump term. And by 2028, we'll probably be seeing ourselves in a recession, post-recession period as the next election would take place at that point in time. So yeah, that's as of right now with the information we have, that's how I'm calling it over the next 4 years. Again, out of the gate, I think things are set up very well for Trump. He's inheriting, again, an economy that is still in the very early innings of a business cycle, and it'll take quite a few months, if not maybe a year or two, for it to continue to play out. And after it does, I think the defining feature will be that echo wave of inflation, and then we'll see kind of how the chips fall at the end of that inflation cycle. So that's what I have in store for tonight. If you are new here and you are an active trader, active investor, head on over to appliedmmt.com. Sign up for those updates. If you like this type of review, we have a lot more coming. We have the monthly outlook that we're recording tonight. A ton of research that we've done already for what it is that we can anticipate in the post-Trump 2.0 era. Yeah, check it out. Active traders, active investors. And if you're an institution, also, we have a new tab up here for you. Give us your contact information. We've had a lot of great feedback on the MESSI model, and we're starting to build out some bespoke options for institutions. So if that's you, yeah, drop us a line there and we'll get in contact. All right, that's all I have for tonight. So until next time, good trading, and we'll talk to you then. Bye-bye.